Hello, this is Luis Roque with HIS Capital Group, and this is the Triple Shot. 3 questions, 3 answers in about 3 minutes. And today we're going to talk about investment vehicles. Now, there are some investment vehicles, meaning investment structures, that you probably never heard about. And the reason is because these investment vehicles and structures are created for the ultra rich. So we're going to tell you a little bit about that, and also what are some of the new changes in the law that allow you to participate in similar structures as those that the ultra rich get access to. So we're going to break this down in 3 different sections and 3 questions. We'll start with the first one. What are the secret investment vehicles of the ultra rich? And these secret investment vehicles are usually called private placement memorandums. So there are many types of private placement memorandums, 504, 506, 505, and all of these ones have different requirements, meaning either A, you are an accredited investor so that you can hear about these things, and also limitations as to what the fund managers can do to raise capital, meaning the general solicitations that they can do. So meaning accredited investor. So in order to be an accredited investor and hear about these special secret investment vehicles, you need to have a net worth of about $1 million, have $5 million in assets if you have a family trust, and also have an annual salary of about $200,000 for you individually and $300,000 between you and your wife. So unless you're making $300,000 a year between you and your wife and have $1 million worth of assets, you probably will never hear about these investment vehicles. And some of the biggest companies in the United States have actually raised capital using private placement memorandums. Facebook and many other companies, they raise capital in their initial stages before they go public so that they can start their company, and then by the time they form the entity and they go public, it's already too late for you to get in. So that is one of the structures. Now, what does the PPM structure look like? And the structure is quite simple. In fact, it's usually created as limited partnerships. And then between these limited partnership, there's also a limited liability company that is the management company. So investors that have their money, they start pouring their money into the entity. The entity is broken into different pieces that you get a share of the entity. Right? And then this entity starts buying assets. So let's say that entity buys a property here and there, they buy a building, they buy mortgage notes, they do different types of investments. And I'm particularly talking about real estate, right? So as those assets increase in value or they generate monthly cash flow, then the money keeps coming back into the entity, and then the capital is split out to the investors that bought the shares within the company. Almost the same thing as going public, almost the same thing as investing in a public company. But now these are in very early stages when the companies are starting before they go public. Last question is, what is a Reg A offering? And this is a very similar structure to the private placements that I'm talking about, but usually in the past decade or so, private placements were only offered to very sophisticated investors. So a Reg A offer allows the general public to hear about these things. So we're going to be talking to you more about that, because Reg A offerings, Reg A Plus, allow you to participate in early stages in the game with companies that are starting to form, starting to invest in many different industries, but we're going to break it down a little bit further when it comes to real estate. So stay tuned for next week. I wish you good luck in your investments and hope to see you soon. Bye-bye.